Hey there, traders. This is Sam. Welcome back to another E-mini Futures Market Recap for Friday, December 20, 2024. It's Sunday right now. A couple days later, just getting around to making the video. There was a chance for a good retracement of Wednesday's drop, and they decided to do it on Friday. And that was touched on in the email that went out on Friday morning. You can read the game plan if you like. Notice that the levels were provided right after 8 a.m. Eastern on Friday morning. And by the way, there were other levels between 584 and 593.27 that I identified, but I did not include them in the daily levels in the email because I saw 584 as an area that if price could get above, it would give the bulls a chance to run. Remember that zone between 584 and 586? For the last couple of days, that has been an area that was likely price could bounce from. And that's what happened on Friday. They tried to fake out the amateurs by spending a lot of time under the bottom of that zone in the pre-market. But once they got above 584 and certainly 586, then the writing was on the wall that the bulls would probably want to drive price higher. I took another quick trade on Friday morning, and it was actually not the way I normally do it. It was when they got above this 584, and I just jumped on board and rode it on the long side for a few points. I didn't have a lot of time to keep an eye on it, but it was an easy trade. By the way, this is sort of the thing that I believe I have conveyed in the trading course that should be available in late January. So maybe I'll pause here to mention a few things about that. In the course, I'm answering questions like, how do you identify good trade setups in real time? For one thing, I teach how to identify these same levels before the market opens. So you'll be able to do what I do each morning, find good levels to trade against throughout the day. And I teach the rules that need to be applied when managing the trades. And also, I teach what to look for to find high probability trade setups, depending on certain market behaviors and a handful of useful tools and indicators, even if price is nowhere near a level. The live trade we'll look at in a minute was based off a quick observation about how price was behaving, and I went with a higher probability outcome, and it paid off. Okay, so where was I? So the two levels that were hit, you can see 584 and 593.27. I'll zoom in here. If you were trading these levels by the rules, what would have happened? After the 15-minute window was open, price was coming back up into this level again. They had already hit it the first time, but it was 940. You're welcome to trade before 15 minutes has gone by. I just like to give the market 15 minutes. And this is a good example of how factoring in a 5-cent buffer helps pull in more trades. So you see the high here was 583.99, and the next candle was 583.94. So if you just waited for the price to hit 584 before triggering a trade in the E-minis, you would have missed the trade. But I add a 5-cent buffer. So 583.95, that would have pulled your trade in, and your 4 points in your E-minis is down here. Wasn't very hard to get 4 points from that level. Then they got above this level. And as I said, I found levels in between here on Friday morning that was in the middle of all this space. But like I said, if price was going to get above 584 and 586, then I would not want to be on the short side. And you could just ride this thing all the way up if you wanted. I didn't have the time to do it, but anyway, we'll get to that in a minute. So not until 593.27, I mean, they had climbed 100 points or so by then, over 100 points. But we're treating this as a process. So we're going to assume you got into a trade at 593.22. There's the 5-cent buffer. Here are the profit objective, the green line, and the fumble threshold, the red line for reference. And I'm just going to zoom in here because of how close together is. There's a lot of price movement. So this 40 cents or the equivalent of 4 points in the E-minis is pretty close. So I was not involved in the market at this point on Friday, but I can tell you that there was an important retracement area above this level. It probably was too far away to withstand being out of the money while they got there. So holding on to this trade enough for them to come back and give you a base hit and then some was probably not ideal for everyone. Maybe not everyone would be willing to hold a position that far out of the money. Again, I was long gone by the time price got up here. If you did go short here and didn't do anything but wait for a fumble signal when they got above this red line here, the trade was out of the money, what would have happened? Well, you would have incurred a 9.5 point fumble trading this level and reversed, and you would have had a base hit and then some as they continued higher. So price came back into this level later. Remember, it was 593.27. So 593.32 would be 5 cents above the original level. So the question is, do you want to take it for a recycle trade on this side, on the long side, expecting to bounce higher? So after seeing this bounce right here, I'm not sure I would want to take this. Plus, price has been going up at this point for some 150 points in this day from the low, and they had just hit the 61.8% retracement up here. So after a run like that, the odds were good that the bulls were going to take a break for a while. I would not have taken a long trade at this level, but let's say you did go long there attempting to trade this level on the other side as a recycle trade. Well, there was a clue early on that price was likely to get under the level for a while. And even if you stayed in a long position, they gave another clue about 30 minutes later or so when they retested this level again and could not get above. So this was a no trade on the other side. You do not want to be in a long position at this point. And for the rest of the day, there were no levels hit. So no more trades taken. I took another quick trade on Friday morning, as I mentioned. We'll watch that right here. So similar to Thursday, I was not in front of the screens at the open, so I missed the original trade, the first one. But I had a few minutes starting around 10 or so, 10 a.m. I saw the bulls were trying to get above this 584. So I jumped on board. It happens pretty quick. And on the long side, I pulled a few points, 5 points, and I closed out both of the contracts. I was long 2 contracts. And then I closed up shop shortly afterward. It's worked out pretty well because of an 11 o'clock meeting that I had to get ready for. And then I was finished for the day anyway after that. So once this trade was satisfied and they continued higher, I was gone and could have trailed it higher, but I was happy to be out of the trade and pocket a few dollars. So that was pretty much it. I'll scrub ahead here, stop this recording right before 10:30 or so, and I was done. On the daily chart, we can see the big retracement that we said on Thursday was likely. So where do they go before they hit overhead resistance? It's probably easier to see on a 1-hour chart. So from this move down, let's say here's the high of this move down to the low. Pretty easy to see they hit the 61.8, and that's where they found overhead resistance before pulling back. It's also worth mentioning that on the weekly chart, they kind of saved themselves from just outright providing a signal of a trend change. Down all week and then finally some strength at the last day of the week on Friday. So this puts them in an interesting place in front of the Christmas holiday. From here, it's possible for the bulls to try to keep price from falling for a while, but the retracement on Friday could be just that, a retracement. And the bears still have a destination in mind that is somewhere lower. And that sort of thing could take some time. So another 10 days or so in the month of December. Then we have the month of January. I suspect volatility will pick up sooner than later. The market is closed on Wednesday, Christmas Day, but the whole week may not be the best environment for trading. I typically don't trade the day before and the day after a major holiday when the market would be closed. I like them to get back into a more normal and typical setting before I jump back in. As you probably know by now, this is the last recap video I'll post for at least a couple weeks. I'll be out of the country and will not be trading. I do plan to run the numbers each morning and put out the levels via email like I've been doing, and I should be able to do that on most days before the market opens, but no recap videos after the closing bell each day until probably mid-January. On the tracking logs, the first one is the playing by their rules. You can read the notes. You would have had a base hit earlier in the day, incurred a fumble of 9.5 points, a base on the reversal as they kept climbing. And here's how those points landed depending on number of contracts traded. That's what you would have given back to the market. And of course, you can see where that puts the averages and the other metrics. And then on my trades, the Sam's trades log here, just 5 points on that one trade. And this level was hit. I'll make it bold. But I didn't take any trade there. Just a quick long trade when they got above 584 with my 2 contracts. So that's what I've got for today, for the week, and really for a little while. The next time I talk to you in one of these recap videos, it will be after a couple weeks, as I said. So if you're interested in these levels in the meantime, just head over to Ticks&Trades.com. I'll still be able to provide the emails each morning and give you something to trade against if you're interested. Thanks again for your interest in the Ticks&Trades channel. I hope you're learning things here, and I'm very excited about getting this trading course live. At this point, everything is done except for the back end of the website. Still a few more things to do with that, and a few tests, but I feel pretty good about the end of January, early February at the latest. I hope I'm not going to regret making a promise, but at least the material is done at this point. Have a great holiday. I'll talk to you when I get back in the country. Have a great rest of your day.